Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximise your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. Today we're talking dividends, and not just any dividend stocks, but 3 US companies that I think deserve a spot on your radar right now. These aren't just about a nice yield today, they've also got growth, stability and cash flow to keep paying you over the long run. I'll break down what each company does, why I like them and how they fit into a dividend focused portfolio. So let's jump straight into it. If you enjoy these 3 dividend stocks to buy videos, make sure to hit that like button, and if we get over 100 likes on this video, I'll keep the series going and bring you more stock picks every month. The first stock in today's video is Zoetis, stock ticker ZTS. Zoetis is the world's leading animal health company. It discovers, develops, manufactures and sells medicines, vaccines, diagnostic products and other technologies for both pets and livestock. Zoetis products are used in over 100 countries worldwide, and in 2024 it generated $9.3 billion in revenue, with roughly 2/3 coming from pet care businesses and the rest from livestock. As you can see on screen, year to date they're down around 10%, with the current price at $146.43. They have a market cap at $64.9 billion. Went public back in 2013, have an 11-year dividend growth streak, but a fantastic 5-year dividend growth rate at 20.11%, and they do have a yield that currently sits at 1.37%. This one is the lowest yielder out of the 3 in today's video, but if you're a long-term patient dividend investor, I feel it's one that will pay off. Zoetis reported a strong second quarter in 2025, with revenue reaching $2.46 billion, marking a 4.2% year-over-year increase and surpassing analyst expectations. Adjusted earnings per share stood at $1.76, exceeding the forecast at $1.62, and the company experienced robust growth in the companion animal segment, which saw an 8.4% revenue increase to $1.79 billion, driven by strong sales of multiple products. In response to this performance, Zoetis raised its full-year revenue guidance to a range of $9.45 billion to $9.6 billion and adjusted its EPS forecast to $6.30 to $6.40, reflecting confidence in continued growth and market development. And as we can see on here, the analyst consensus is that it is between a buy and strong buy right now, with that price target being $191.60, which is 34% above the current price. When having a look at their 12-month Wall Street estimates, we can also see that they are very optimistic here, with their lowest forecast still having a 5% upside in the current price at $154, on the average forecast having a 33% upside in the current price being $195, and on the highest forecast having a 65% upside in the current price being valued at $241. But when plugging in my numbers for their intrinsic value, on the base case, it did come to a 13% overvaluation, only being valued at $127, but you do have to take this with a pinch of salt, with this company obviously trading at a slight premium because of how big it is and them having a slightly lower starting yield with that fantastic growth rate. So I think Zoetis is an excellent US dividend stock to buy in October 2025 due to its dominant position in the animal healthcare industry, resilient growth drivers and reliable cash flow. As the world's largest provider of medicines, vaccines and diagnostics for pets and livestock, Zoetis benefits from long-term trends such as increasing pet ownership, rising veterinary care spending and global demand for animal protein. Its diversified portfolio across companion animals and livestock helps smooth revenue volatility, while its strong brand recognition and global reach provide a competitive moat. With a history of consistent dividend growth, robust margins, and a business model that generates steady, recurring cash, Zoetis offers investors a combination of income, stability, and long-term growth potential in a defensive yet expanding sector. So this is a stock that I'm keeping close on my radar, potentially going to be adding it to my own personal portfolio. Hey everyone, this is just a quick heads up that the autumn sale for Snowball Analytics is here with a massive 30% discount. Make sure to jump in early to get the best deals and don't wait too long because it ends soon. Be sure to use my unique link below to grab your discount, and you can even renew your subscription at a lower price, so don't miss it. The next stock we're looking at in today's video is Merck Co, stock ticker MRK. Interestingly, their site is actually banned within England, so I'm not able to access it, so I've had to jump on Yahoo Finance just to show you a little bit of background on this one. They are a leading global healthcare company specializing in pharmaceuticals, vaccines, biologic therapies, and animal health products. It operates across key therapeutic areas including oncology, immunology, neuroscience, cardiovascular, and infectious diseases. Merck is best known for Keytruda, its groundbreaking cancer drug, and Gardasil, the HPV vaccine, while its commitment to research and development drives ongoing innovation and improved patient outcomes worldwide. As you can see on screen, year to date they are down close to 16%, with their current price being $83.93, and they actually had a little bit of a spike today, being up 6%, because when I was planning on this video they were a little bit lower in price, being around $78, so unfortunately they have had a little spike up, but I do still think it's a great price to buy in at. Their market cap is $210.76 billion. They went public back in 1941, have a 14-year dividend growth streak and a 5-year dividend growth rate of 6.49%. And they have a dividend yield that currently sits at 3.86%. Merck Co reported strong second quarter 2025 results, with their earnings per share of $2.13, surpassing analyst expectations of just $2.02. This performance was driven by robust sales in oncology, particularly from Keytruda, which saw a 9% revenue increase to $8 billion. The company also received its 10th earlier stage approval for Keytruda, highlighting continued innovation in its pipeline. Despite a 2% year-over-year decline in total revenue to $15.8 billion, primarily due to a significant drop in Gardasil sales in China, Merck's diversified portfolio and strategic investment positions it well for future growth. The company reaffirmed its full year 2025 revenue guidance of $64.3 billion to $65.3 billion, reflecting confidence in its ongoing business momentum. As we can see, the analyst consensus is that this stock is currently a buy, with that price target at $99.50, which is 18.55% above the current price. And when having a closer look at their Wall Street estimates, we can see that on the lowest forecast they do still see a slight downside at 1%, but on the average forecast they do believe the stock could be valued at $101, which would be a 21% upside. And on the highest forecast they believe there could be a massive 77% upside, being valued at $148.05. And when plugging in my numbers for their intrinsic value, we can see that they are currently undervalued by 33% on their base case, being valued at $124.49. So I think Merck Co is a compelling US dividend stock in October 2025, thanks to its world-class drug portfolio, powerful pipeline, and consistent cash generation. The company's leadership in oncology, anchored by its blockbuster cancer therapy drug Keytruda, provides strong and recurring revenue streams, while its vaccines, animal health division, and broad therapeutic lineup offer diversification and stability. Merck has a long history of rewarding shareholders through regular dividend growth, supported by a resilient business model and a robust research pipeline that fuels long-term expansion. With a defensive healthcare profile and steady demand for its life-saving medicines, Merck offers investors a reliable mix of income, stability, and future growth potential in any market environment. The last stock in today's video is Blue Owl Capital, stock ticker OBDC. Blue Owl Capital is a business development company which specializes in direct lending to US middle market companies. It offers financing solutions to companies having EBITDA in the range roughly of 10 million to 250 million, or revenue that's between $50 million and $2.5 billion. Its aim is to generate current income from interest and fees with some capital appreciation, while managing risk through diversification, conservative leverage, and focus on seniority and security of loans. The company is actually externally managed by Blue Owl Credit, and back in January 2025, they became the second largest publicly traded BDC by assets, with a portfolio covering over 230 companies and tens of billions in fair value. When having a look at the stock, we can see they're down close to 16% year to date, with a current price at $12.74. They have a market cap at $6.51 billion. When public in 2019, have a 5-year dividend growth streak with a 5-year dividend growth rate at a massive 17.14%, and also boast a fantastic dividend yield at 11.22%. Blue Owl Capital delivered a strong quarter, reporting GAAP net investment income of $0.42 per share and adjusted NII of $0.4 per share, both above expectations and up from the previous quarter. The company declared total dividends of 39 cents per share, including a 2-cent supplementary dividend as well, representing an attractive 11% annualized yield, while revenue climbed to $485.8 billion, beating estimates. Blue Owl also generated $1.1 billion in new investment commitments, supporting a 10.6% annualized return on adjusted NII. Despite minor write-downs that slightly trimmed NAV, credit quality remains stable, highlighting the BDC's strong earnings power and healthy portfolio growth. And if we have a look at this one, we can see that the analyst consensus is that it's between a buy and strong buy, with a price target at $15.63, which is 22.4% above that current price. And when having a look at their 12-month Wall Street estimates, we can see that even on the lowest forecast, they still do believe there's potential for a 3% upside, with the average forecast having a 25% upside, and the highest forecast being valued at $18.90, which would have a 48% upside on the current price. And when plugging in my numbers for their intrinsic value, we can see that on my base case scenario, they were undervalued by 22%, being valued at $16.32. So I feel that Blue Owl Capital stands out as an attractive US dividend stock in October 2025, thanks to its consistent income generation, strong market position, and shareholder-friendly structure. As one of the largest business development companies, it benefits from scaled diversified lending across hundreds of middle market borrowers and a disciplined focus on senior secured loans that help protect capital. OBDC offers investors a compelling mix of high yield, stability, and long-term compounding potential in a market where dependable income remains highly sought. As you all know, I'm as transparent as possible on my channel, so I will tell you that as I'm making this video, I have actually opened a position up in this one for around 100 shares of the stock, and I'm going to continue to look to add to this in the coming months. And that wraps up a look at our 3 discounted US dividend stocks to keep on your radar for this October. So whether it's Zoetis leading the way in animal health, Merck Co continuing to deliver strong growth in pharmaceutical spaces, or Blue Owl Capital making moves in the alternate investment world, each of these companies brings something unique to the table. They're all tapping into different trends, healthcare, innovation, and smart capital allocation, which make them all worth keeping an eye on for the month of October. I'll continue to try and seek value with dividend-paying stocks on a month-to-month basis, so if you found any value in today's picks, don't forget to like and subscribe and hit that bell notification so you never miss an opportunity to grow your portfolio. Let me know in the comments which of these stocks do you think has the most upside potential. Thanks for watching, and as always, invest smart, stay patient, and I'll see you in the next one. For now, this is the Geordie Pig Investor, over and out.